Hello everyone, welcome to Blue Dragon Actual. So today we are going to study the remaining portion of the actual practice standard, not actual practice standard, the appointed actuary regulation, and also the actual practice standard 4, which is peer review. Peer reviewer. Basically, I think these two are kind of quite related. Now, before we start that, there are a couple of small announcements. I think I mentioned about mock interview of people in one of my LinkedIn posts, and nobody has kind of uh, like expressed any interest. So I think if I mean I was kind of hoping to get few of the replies by maybe in the weekend, but since I have not got any reply, so I think I mean probably people are not interested in having their mock interviews, and that is absolutely fine. I'm just letting everyone know that like someone might think that he has announced, but there is like he is not doing that. So if I don't receive any application or something like any message, then there is no point in having that. So if you still want to do that, you can go to LinkedIn and check that video where I have given the details and the procedures to be followed. Secondly, I am seeing my subscriber base rising to 187, and thanks a lot for that. However, one thing I'm slightly disappointed is whenever I'm asking any question, uh, no one is kind of writing the answer to that question, or no one is giving any feedback as such. So either that would mean that everything is very good, I'm doing a perfect job, or otherwise people are not following the entire video. I mean, probably it's so that's why I think today not today I was supposed to answer that non-negative residual addition. What do you mean by non-negative residual addition for a unit link business or for any link business? And I'll kind of hold that answer and see if there is any response after posting of this video, and let's see if someone kind of respond back. And it's I mean there is no point in thinking about whether it would be right or wrong, whether people will mock you. I think it's normal. There would be times when I'll be wrong here and people will come and correct me, so I think that's perfectly normal. It's important to try. Otherwise you'll never know whether you'll be a good actuary or not, right? So that's how you kind of grow your concepts when you are kind of trying several things. And finally, I think last week almost a video was kind of released almost every day at 7:30 p.m. So this week I'm trying to find that magic number, the optimum number of videos that I should be releasing in a week, because I can release number of videos in a week. The point is whether people are seeing that and watching that, whether right, I mean creating too many videos would be difficult for people to ingest. So this, when I started my actual channel, I initially thought of having only 4 videos. So this week I am going to follow 4 video approach. Also, it will help me in preparing with my exam, which is on 14th of July. So that's why this week I'll post only 4 videos, and that will be posted on today, Monday, Wednesday, Friday, and Sunday, right? And of course, if there is an interview, mock interview thing going on, then that will be posted separately on Saturday and Sunday. Those 2 videos will be separate. One would be the interview, and another would be the analysis. So unless that happens, there will be 4 videos, and yeah, that's it. So those are the announcement. And let's, without any further delay, let's move on to the appointed actuary regulation. Now, this part we have already kind of gone through the appointed actuary regulation duties and obligations, which was kind of related to the ALSM regulation. Now, the appointed actuary regulation, as I mentioned, was kind of released in 2017, and there was a lot of reason for that, right? And I will also kind of touch upon one of the approach that was kind of taken by Institute of Actuaries of India. You have probably seen that approach and you don't know why that was taken, and whether a big question is whether it was ethical or not, because one of the portion of being an actuary would be to ethical, right? Would be to be ethical, following practice standard, etc. So I'll also touch upon that. Is only my view. I don't want to create any controversy or anything, but that is my view, and I'll try to, because that's how things happen in the industry, right? You need to understand the why of it. As I mentioned, the actuary, appointed actuary, or the actuary, or the person who answer the why in the business they are working in. So this portion of the appointed actuary regulation would be related to the eligibility criteria, and I mean something, and related to the powers of an appointed actuary, or the privilege that is conferred upon appointed actuary. So moving on, so appointed actuary, as part of this regulation, an insurer transacting business, which may be life insurance or general insurance, etc. Transacting insurance business in India need to appoint an appointed actuary, who shall be called the appointed actuary as per regulation B and regulation F. The appointed actuary eligibility criteria would be as follows. Orderly should be a resident of India, should be a fellow member, should be qualified and should be a qualified actuary as per the Actuaries Act 2006, should be a qualified actuary from the Institute of Actuaries of India. Now, qualified actuary will mean who have passed the specialist level application subject in life insurance. It is SA2, general insurance is SA3, right? And here comes the important part, which is related to valuation and the experience. Now, appointed actuary need to have 10 years of qualification, 10 years of work ex to be qualified as an appointed actuary. And out of those 10 years, 5 years would be post qualification work ex, right? So anyone cannot become appointed actually. 10 years of entire workix at least, and 5 years will be post qualification workix. And out of those 5 years, 3 years has to be in statutory valuation of a life insurer, right? And for general insurance, it will be general insurance. So you'll see that uh, the how important is statutory valuation, right? Now the person has to be an employee of the insurer. The person cannot be an appointed actuary of any other insurer. The person cannot be over 75 years of age. The person should not have committed any professional breach of conduct or professional breach or misconduct, etc. And finally, the person should hold a certificate of practice, which is issued by Institute of Actuaries of India. Now, if the now the notification is for existing actuaries, and herein that controversial ethical part comes into picture. So this because this regulation came into picture in 2017, for all the existing appointed actuaries who would be exempted from passing the specialist level application subject, if in the preceding 7 years from the date of this notification, that person has served as an appointed actuary for 5 years. However, if that person has, however, if this criteria is not satisfied, and for health insurance will be 3 years. So for different business, the period of work should be much lower. But however, if that person has not sub like that person has the person is not satisfying the criteria, then he or she is required to pass the specialist level application subject within 2 years from the date of this notification, right? And if the person who after the if the existing appointed actuary has cleared that paper, then this notification does not mean anything for that person, and the person can continue with the normal terms and condition. The insurer is required to submit to the regulator or the authority for the appointment of a person as an appointed actuary as per IRDA AA1 form, appointed actuary one form, and the authority or the regulator will kind of review everything and get back to the insurer in 30 days from the date of application submission of the application. The appointed actuary, the regulator, in case the application has been rejected, then the insurer is required to submit submit the name of another person to be to who the insurer want to nominate for appointed actuary position. And if the application is rejected, then the authority or the regulator would also give the chance to the insurer for being heard of why, and also provide their rationale why the appointed actuary is being rejected. Now, this is where the controversy or the ethical part comes into picture. You remember that in 2018 or 19, I think 2018 maybe, there was a discussion regarding the people who have not cleared SA2 for a long time from II, because like as I mentioned, I am also stuck in SA2 paper for 2 years. There is no other paper that have been stuck into for such a long time. And at that point of time, it was kind of given that people who have not cleared SA2 but has cleared SA2 from UK and also have very good quality experience. Now that quality of experience, whether how that quality would be determined is not clear, but the institute will examine, and those will be given exemption from passing SA2, right? And there I think there are many people who have who have not cleared SA2 from India. Because of this regulation, they could not function as an appointed actuary because they were required to pass the paper from 2 years of this notification, right? And that's why I think that rule came into picture, that if you have good quality work ex and if you have cleared SA2 from UK, then you would be able to get the exemption. And it is I can tell you, clearing SA2 from UK is much easier as compared to clearing SA2 from India, though it does not hold for any other paper. For India, you need to memorize regulation, and there is no proper material. The question level is also quite tough. So that's why you'll see many experienced people is also the way you need to write answer is probably difficult, right? So that's why you will see many people who has not cleared the paper, but by that methodology, they got the exemption in SA2. Now, whether it is ethical, whether it is regulatory regulation driven, and that, by the way, that is still applicable even now, right? But I mean, probably by quality of experience, I think they would have kind of cleared people who have worked in the Indian scenario. But if someone has worked in, say, a KPO setup, I don't think that person's application will be rejected. So this is where something I think I think that approach was not ethical. However, the institute has done that, and that is still in process. But these days, we don't see too many applications. I think that that point of time there was a lot of notification being published that these people are given fellowship because of their work experience. Anyways, moving on to the regulation, business continuity. So no insurer or reinsurer can function or provide insurance service beyond a period of 1 year without the appointed actuary being nominated or without the appointed actuary position being filled. However, the chairperson of the authority might issue some transitory provisions for the insurers who have not been able to appoint appointed actuary, or for where young actuaries need mentoring for statutory valuation activities. Now, moving on, there would be now what are the cause for cessation of appointed actuary. I think that would be so if a person the chairperson of the authority, or the authority might kind call submit a or provide a notice of withdrawal for the appointed actuary. If for notice of withdrawal to the appointed actuary, if that person has committed any breach of professional misconduct, has committed any breach of professional conduct, or the person, I mean, or the authority thinks that that person has failed to deliver his duties and obligation in an adequately and proper manner. And mind you that that regulation, which is that you need to clear the SA2, that is like that is a kind of mandatory regulation. You cannot just skip it. So the authority will may kind of consider the any kind of request made by the insurer to consider the application, other than that is of related to the professional misconduct, other than related to the SA2 subject clarification, and if the person don't hold a certificate of practice. So these are the three areas where no relaxation is there from the authority. Anyways, so the person who is kind of cessation of an appointed actually. So if the person is if the person has conducted any professional misconduct, then the person can be terminated. Appointed actually position can be terminated, and if the person is if the person has not been able to fulfill his duties and obligations, then the person will be terminated. Provided in such circumstances, the authority will once again give chance to the appointed actuary of being heard, and after that, the appointed actuary, the authority shall decide whether to kind of continue with the proposal, or continue with the proposal of kind of rejecting or not terminating the appointed actuary, or kind of uh, revoking that proposal. If an appointed actuary ceases to be an appointed actuary of the insurer for any other reason, then that should be communicated to the authority in 30 days from the date of from the date of such happenstance. Now, the appointed actuary would be required to powers of an appointed actuary. Now, powers of an appointed actuary means that appointed actuary uh, should have kind of reached to any records and documentation of the insurer, and the appointed actuary can ask any employee of the insurer to provide him or her with that information. The appointed actuary can also attend meetings of the management of the insurers, which includes the directors. The appointed actuary can also attend meetings where any actual advices or the financial statements or the annual reports of the insurers discussed, where there is any actual advice that is being required, and once meetings where there is policyholder reasonable expectations are being discussed. Appointed actuary also can attend the meeting where there is a discussion regarding shareholders and policyholders, and also that discussions where the duties and obligations of appointed actuary are being discussed. And then would be the duties and obligations, which I've already covered. Finally, moving on. So appointed actuary has absolute privilege, which is over and above any other privileges that is conferred to the appointed actuary, to make a written or oral statement, which would help enable him or her to kind of discharge his duties and obligations. And any words or any words or section in the appointment letter that prevents him or her doing so would stand null and void. Right? So appointed actuary, no one can stop appointed actuary from making a comment if that is in the if the appointed actuary thinks that is for the that is required for duties and obligation that has been kind of conferred upon him. So conflict of interest, the appointed actuary needs to determine that the appointed actuary holds the position and there is no conflict of interest because of his appointment as an appointed actuary, and shall be can and this, if there is any appointed a conflict of interest, that should be kind of disclosed. So applicability to the reinsurance business. Now this regulation is also applicable to the reinsurance business who is kind of providing the reinsurance service. However, this is not applicable for any reinsurers who is providing the reinsurance service by establishing a branch in India. As for example, Swiss Re. Swiss Re has only established a branch in India. For that, the appointed actuary regulation is not applicable. So this was in short the appointed actuary regulation. The most important part was the how important SA2 paper is to kind of clear to become an appointed actuary, and that is no one can the authority can provide relaxation in other section, but they will not provide a relaxation in that section. Right? If you have not cleared SA2, you have not cleared SA2, then you will not be getting any exemption. So moving on to the APS, which is kind of related, which is the peer reviewer. Now, peer reviewer is once again this regulation or this actual practice standard is like a story. So here, someone external would be kind of review the work that has been done by the appointed actuary. Although appointed actuary will have the final say because he is ultimately responsible or she is ultimately responsible for the work done, the reserve calculated, etc. However, the peer reviewer will do the same work and do some high level checking, and there would be discussions, formal discussions between the peer reviewer and appointed actuary, or there should be some formal documentation of that as well. Now, who can be a peer reviewer? The peer reviewer can be a person who is external. Now, what is the definition of external? That person cannot be part of any consultancy or any agency that is kind of linked with the insurer. That person cannot be an employee of the insurer. That person cannot be, if the person has served the insurer, then there should be a minimum cooling off period of 1 year. However, if the person is a pensioner of the insurer, then even if the person is still taking pension, then that person can be a that person can be recorded as an can be considered as an external person, and that person should not belong to any other group companies of the insurer. So if for example, as I remember, the SBI is the brand, and if a person who is kind of working as a peer reviewer cannot be part of SBI if he is kind of peer reviewing the SBI Life insurance company. So that's what is meant by peer reviewer. And also the restriction of age does not apply for the peer reviewer. So any person who is, like, you remember in appointed actually, the person cannot be over 75 years of age, but here the person can be over 75 years of age. So, and obviously the person need to pause a certificate of practice. If the person do not pause a certificate of practice but is very close to obtaining it, then the person can then the appointed actuary can disclose that, or the peer review can disclose that in the report, and mention that the person peer like the certificate of practice will be in process. And also the peer review should not show that there is any conflict of interest. So first point, external, was related to the independence. Then the second point was related to the conflict of interest. So if the person can be from a non-actual company, and where the non-actual company, if the person non-actual company is kind of involved in any business transaction with the insurer, then it has to be ensured that there are Chinese walls or sufficient independence is there, so that there is no mismatching of information or the informations are not shared. So that's the Chinese wall concept. That is conflict of interest. The person should disclose, any person who's functioning as a peer reviewer should disclose that there is no there is no conflict of interest, and any business or transactional relationship with the insurer should be disclosed. And in past, obviously past relationship, if there is a current transactional business relationship, then that person cannot serve as a peer reviewer. Any past transaction business relationship should be disclosed. Also, the person need to ensure that he or she is competent enough, that the peer reviewer is competent enough to kind of carry those duties and obligations. And obviously, the peer reviewer will look into everything like the method of collection of data, and the method assumptions, the analytical methods, the reasonableness of result, etc. However, that will be a, as I mentioned, that will be a high level check. The peer reviewer can also delegate some of his activities to others. However, he or she is solely responsible for, for the peer review being carried out. He cannot pass on that responsibility to someone else. And what is more important is a peer reviewer certificate or peer reviewer peer reviewer certificate is kind of submitted by the appointed actuary to the board of directors, and he or she appointed actuary can also submit it to the regulator, and the regulator may call upon the peer reviewer to explain few of the details if they are not clear about it. However, as I mentioned, the appointed actuary, if there is a point where there is a discussion and the appointed actuary does not agree with the peer reviewer, then it would be the final call would belong to the appointed actuary. And also, if there is any actual practice standards or regulation where there is a deviation in the methods and assumptions or calculations, then that has to be indicated in the peer review report. So I think that's it. It was a very small kind of actual practice standard, and it relates to, so mainly three things are important: independence and conflict of interest and competence. Right. And if you remember these 3 points, which is related to the peer reviewer, that person has to be independent. So he has to be an external person. A peer reviewer is independent external. It cannot be an actually working as a consultant. So first portion is independent. Second would be that the person is kind of disclosing any, if there is any conflict of interest. So that has to be disclosed clearly. There should be Chinese wall. The person should hold certificate of practice, and if the person do not hold certificate of practice, then the person can provide the certificate of practice in a short period of time, or the person is, or if the person should believe provide a declaration that certification of practice will be available, and then there will be method of operation which will be high level, is directed to the board of directors. And finally, if there is a conflict between the opinion of appointed actuary and the peer reviewer, it is the opinion of the appointed actuary that matters. So that's it. If you like the content, please share and subscribe. Please answer the question, which is related to non-negative residual addition. And yeah, I look forward to those comments. Any feedback, please mention that in the comment section. And if you like it, please like, share, and subscribe. And yeah, see you in future videos. Thanks for watching.